I listened again at your site. It's really good. I like the explanations, and it makes better.
Thank you.
Yeah.
It's I want to take it to the sky. Believe it or not, I have very good news. We started those courses overseas, and the demand is so big, which is make me so happy. And my children start joining me, and I have other students literally teaching in other countries, which is make it beautiful. And we started 2 weeks ago a course in Uganda, and immediately on this coming Sunday, we're starting. My son is dealing with that one now, and we have 3 more to come. 1 more to come on Sunday, and in the beginning of September, we're starting another one in Ivory Coast, and then we're starting in Chicago. That's really beautiful. Now I'm waiting for you guys to take it to the East, in Asia, any places in the world. But the most I want to see you charging very little amount and you're making a lot of money. That's the beauty. So it's a win-win-win. This is the beauty of life. Not that you charge a lot and you're not making enough money. That's not smart. Am I right?
Correct.
You want to charge as little as possible, still make a lot of money, and you make everybody happy. Otherwise, you didn't study the course financial statement analysis.
Professor Amos, a question. You mentioned you're doing the course in Uganda.
I mentioned what?
You're doing the course in Uganda?
Yeah, another one starting on Sunday. But this is not financial statement analysis. This is the framework of software engineering. This is my contribution to the world. I'm charging them only $250 for the whole course, which is really almost free. We're limiting the number of students to 10. I don't know how much you know about Uganda, how much you know about Africa.
I know pretty well about Uganda. I've been in Uganda for the past 10 years.
Oh,
and that's why I got my interest to see what you're doing there, because we were trying to do another program for agriculture through the Makerere University.
Oh, listen to me. I own 200 acres on the Nile.
Sweet. In Jinja?
No, before Jinja, it's on the web. You know what's Karuma village?
I think so.
It's exactly where the Nile cut.
You mean the source of the Nile?
From Kampala to Sudan, South Sudan.
Yeah.
If you look it up, it's right where the Monson Safari there, and the Monson Falls.
Where the monkeys are.
Exactly.
Yeah.
I'm about 10 kilometers from the natural safari. So
Sweet.
I made a vote that I will never take any money out of Uganda. I will not put any more money. Everything I'm doing in Uganda stays in Uganda. So, and
Very
why
smart.
I want to do that? Because if you look at those countries, the median age, it's about 17 to 18,
Years.
which is ridiculous.
Yes. Ridiculous.
It's make you sad, but what more sad that they are all unemployed.
Indeed.
So
very high unemployment rate.
They're starving on 2 dimensions, mentally and age. You know, mentally because they can't get a job, they cannot get education. So anything you do there, here we go. If you are brave enough, join me. We're going to school over there.
With pleasure. Maybe we'll also introduce you to my network of people.
So after the session today, you're going to call me.
Definitely.
And you're going to take that course on Sunday. You're going to pay $250.
With
and
pleasure.
you'll be one of my students from Israel. The money not coming to me. I'm not taking
no problem.
a penny.
It's for the community.
but I'm keeping the money to build up some structure so I can expand it, you know?
Yes.
And then after you take that course, I want you to teach that course.
With pleasure.
Exactly.
It's an opportunity.
And not
I
only
can
you make money out of that 250, you make everybody happy.
Indeed. This is
So
actually
that will be
the
your
benefit.
donation to Uganda. Like you're donating 250 to take the course, and that money stays in Uganda. It'll be really nice. You will tell me thank you for taking that course. My son is
Indeed.
teaching the course. I will be joining some of the sessions.
It will be an honor, actually. Thank you.
Yeah. Anybody that want to join, want to take the course, take it and teach it in another place. I give you everything you need. Okay? By the way, anybody that believes the Bible or the Quran or whatever, they'll all tell you God is commanding you to be rich. And that sounds ridiculous. You know, it's a commandment and a blessing almost in all religions. Just people don't realize that. You're supposed to be rich, but don't steal, God forbid. You're being rich by making something that nobody else. And another lecture. Next time I'll tell you where it's in the Bible. It's very cool. Anyway, I'm not a religious person, okay? So to remove that, but I do believe in all religions together. I think that's the best religious. Anyway, let's start our session. Let's everybody join us. Yeah, we got 21. We're supposed to be at, I think, 28. So I will start with review what we did last time and give a chance to everybody else to join. And then we'll start what we're supposed to do today. Since last time it was all the first time, let me just, you guys can close the video or make the communication easier. Who made that smile here? Okay, let's leave it. Why not? I'm going to the courses. I was talking about this course, by the way. Okay, let's go here. Let's go here. I have one more video to upload in Arabic. So Arabic will be done by the end of this week. We started here. We started with this component. I'm going to do a review from A to Z. Everything we did. Hold a second. I want to record it. So sorry about that. Let me double check that it's recorded. Yeah, it is recording already. Good. Since I know that it was the first time you saw statement of cash flow, I would like to do a complete review of what we did last time. Won't take us too long, okay? And I think it's good for the brain. When you review something like that, you know, you absorb it better, okay? What we see here, we have the balance sheet. Special about balance sheet, this is my total assets. This is my liabilities. And this is my equity. Then here we have income statement. The last row, it is the net income. And we said last time, the net income, it's what accumulated profit from the beginning of the year to the end of the year. So this amount supposed to be the difference between retained earning beginning of the year to the end of the year. So if I see that this number is different than the difference between the beginning of the year to the end of the year, let me write it down. Okay, the net profit was 112. And I see that the difference in retained earning, it's 180 minus 128. So let's do it, 180 minus 128. That gives me 40, 42 or 52? 52. Is that right? Am I right or I made a mistake?
We see only presentation. We do not see what you're writing.
Ah, you don't see it? Why?
I didn't know.
I thought I did share. You don't see my screen? But I
We
see
see
somebody is
only-
painting. Yeah, I saw just somebody painting on the screen.
we
Can you see now?
still not.
You can only
Only
see
balance
the
income
the
and
message.
Is
the
anyone
cash flow.
see? Is anyone see? Because
No, only the platform.
do you see the component, the balance sheet income statement?
Yes.
Yeah.
But you don't see the white. Now, do you see something? Like what I typed,
Still not.
the notepad.
No.
You don't see my notepad?
No.
No.
Very strange.
Maybe you split your screen. And then
No,
we
it's
can
almost-
see
I
both.
use it all the time. Very interesting. Okay, let me tell you what I did. So I will remove that. I'll just say it's out loud, okay? It's very strange. Let me open another type of notepad. Tell me if you, do you see now another notepad?
I think you need to stop the
The
and
sharing screen.
you need to like reshare the notepad, not the actual presentation.
I think you're right. I got it. I usually do the sharing. You're right. I usually do my screen. This time I shared a specific window. You're right. Yeah, this should work now. Okay, you see that one? Now let me try. Tell me if you see my notepad. You see my notepad?
Yes.
Yeah, we saw it.
Okay, that was the difference. Before I
We
was
see.
sharing only my, yeah, good, thank you. I like that comment. This is beautiful, thank you. Okay, this is a good use of that one. Thank you. Okay, I will start all over. Let's refresh. Let's go back here. Why? Let's go back here. Go back here. Let's go here. Let's go here. And let's go here. Wonderful. So now we'll be fine. Yeah, that should do it. Good. Now we'll put the notepad. And now I will talk about this one. Okay. If we look at the balance sheets, we can see that the retained earning beginning of the year was 128. The end of the year, it was 180. So 180 minus 128, that how much profit we kept. Meaning we made some profit, we'll see it in a minute. And whatever stayed in the company, it is really, it should be 752. Is that right? Am I right?
52.
Yeah. Okay. But how much profit did we make? We made a profit of 112. Meaning, where is the rest gone? If I made a profit of 112, I only kept in the company 52. If I take the difference between 112 and 52, that gives me 60. Anybody wants to guess?
Expenses.
What are those?
Expenses.
No, think about it. This is your net profit. You had
It's
revenue.
net income.
That's exactly. That's
Oh,
the net
yes, yes.
income, 112. That's the profit the company has made. Now the company has two things to do with that money. One is to keep it in the company. They decided to keep 52. How do I
Or
know?
dividends.
Exactly. They simply decided to keep 52. The difference must be distribution of dividend. And where do I see it? Anybody want to guess which statement do I see that 60?
Isn't it
Statements
returned?
of cash flow.
Anybody see
Returned
that
earnings?
account somewhere?
In cash.
Comments.
Exactly.
It's cash
Look
flow.
at the statement of cash flow.
Cash
It's
flow.
right here in the dividend. Okay? So in another word, if I go back, don't worry about it. We have plenty of time, guys. I really think this is, you really need to know it by heart. You're going to be good managers. And later on, you build on top of it. When you get a really good understanding of those three statements and the relationship between them, everything becomes to be trivial. Take my word for it. You will see, we'll finish a lot today. Okay? And repeat, repeat, repeat. Do it several times at home. Go over that component many times until you really absorb it. Then it will be really easy to put on top of it other stuff. So that's why I'm doing this review. In the statement of cash flow, I see this 60. But before, even without looking at it, I want the logic. I want the logic. What's happening during the year? What is really the income statement? What does the income statement really does? The bottom line. I have the assets at the beginning of the year. I have liabilities. I have an equity. The bottom line in the equity, okay, there is two things that can change the equity. This one, which I will come back to that in a second, but I want to focus on this part. This is really, okay, the difference here between this one and this one is by how much the assets went up more than the liabilities. One more time. I have two things here. 50 goes to 65. 128 goes to 180. Okay? Those two differences, it's really nothing but the differences in the assets. How much is the total assets went over what it was in the beginning of the year, minus the change in the liabilities. That's really what it is. You know, it's like an equation, very, very simple equation. Very, very simple. Look at it this way. Let's write it this way. Assets, beginning of, end of the year. I have assets, end of the year. On the other hand, I have this is equal to liabilities, beginning of the year, end of the year, equal liability, beginning of the year. Then this is plus equity, end of the year. This is equity, beginning of the year. Okay? Now let's look at the difference. What do you have on the left side? This is really the change. Let's call it change in A. Must be equal to what? Must be equal to the change in liability plus change in equity. Very simple. That's really what it is, so simple. I have the end of the year, what can happen? The assets could go up, okay? If the liability went up, that can explain why the assets went up. But if the liability didn't go up, it must be that the equity went up. Very simple. The truth of the matter, this is really nothing but the statement of cash flow. It doesn't seem like, but really what it is. So simple. The only difference is that now the brain usually don't, it's so easy mathematically, but the brain has resistance for some reason. That's what I discovered over the years. It's just kind of confusing, but that's why you need repetition. And here we go, let's do it. What do we have a change in equity? This change in equity, it really is this minus this, plus this minus this. One more time. The change in the equity, this change, it's nothing but The difference between 180 to 128, that's the 52. Okay? What the second thing's changed? I have 65 versus 50 I had at the beginning. So I can say from the standpoint of the stakeholder, the shareholders have increased their stake in the company by 15 and by 52. So let's put it this way. Change in equity equal to change in retained earning plus change in common stock. One more time. Change in equity, it's the 52. Change in common stock, it's 15. So the total change in the holding of the shareholders, it's exactly 52 plus 15. So let's think about it. What is this 15? This is really the company has raised extra 15. What is the other one? The other one, the company has made 112, and out of the 112, the company have decided to distribute only 60 dividend and the rest to keep in the company. Therefore, the shareholders has more holding in the company at the end of the year than they had in the beginning. They had this total. That will be 67. They have extra additional 67, but the sources are different. The 15, the company has raised money. The 52, it's profit that the company has made that belongs to the shareholders, but the company had decided to keep in the company to grow. Let's make it slightly even one stage further, just to really understand how that goes. Let's think about it one more time. On one hand, the company distributes dividend of 60. On the other hand, the company issue common stock of 15. Why I'm doing that? That's a very important point. So this is really interesting. Bottom line, okay? If I want to say, how much money really did the shareholders together receive from the company? Okay, net, let's call it net cash flow for equity. Let's do it this way. I'll make a little space here. That will be, how much that will be? 45. Anybody want to contribute discussion? What the meaning of this 45? Anybody? You can't really be wrong. Whatever you say, it's good. Okay, go ahead, guys. Anybody wants to join or tell me what the meaning of this 45? Anybody? Go ahead, guys.
Liability.
No, think about it. Let's say the meaning. Let's say the meaning. What is the 60?
Is that the 45? Is that the money that they have that year to as in like as a free amount to use?
Excellent, excellent. Think about it. Okay, let's look at it this way. Let me just put that again. See, the company really had made 112. Is that right? You agree? The company had made 112. 112. The company has given the shareholders only 60 out of the 112. So far, so good. Now you say, okay, on one hand, let's say we have one shareholder, just for simplicity. Let's say you are the shareholder. The company have given you 60 dividend. On the other hand, they issued you stock. What does it mean issued you stock? You gave back 15. So how much, the bottom line, how much money did you get from the company? You got only 45. Does that make sense?
Yeah.
That's pretty cool. This is very, very important because this number is so important when I want to analyze how much cash flow I have received from the company in a specific year. So if I made an exam, we don't have an exam, but if I made an exam and I ask, based on those numbers, how much cash the shareholders have received in 2002, the answer should be 45. Net cash flow. It is not really the dividend. The dividend was 60. Since I issued common stock, it's really like, think about it, they got stocks, which is piece of paper, and they gave back 15. Net, the company have given 45. That's a pretty important number because bottom line, that's the money I have extra that come from the company. That's a very important number. Now let's look at it one more way and analyze and really absorb the statement of cash flow. On one hand, we have the 112 here. Hey, where is the 112 appear in the statement of cash flow? It's right here. Everybody sees the 112? It's right here. Okay? Fair enough? Why the numbers got crazy on me or I'm confused? Why do I see 128 here? That's not the right number. It was 52 before. Let me refresh it. Did I change something?
Usually reach the negative dividend.
No, it's supposed to be negative, that's good. But for some reason, yeah, this is fine. I probably changed something by mistake, okay? Yeah, this is fine. Good. Let's go back to see those numbers here. Okay. We have 112. From the 112, the company distributed 60. So this is the 52. Everybody agree? Everybody agree that this is the 52?
Yes.
112
Yes.
Yeah.
minus the 60.
Yeah,
That's supposed to increase the cash. We just use it in other places. But the bottom line, the difference between the 112 and the dividend, that's that increase. That increase supposed to increase the cash. One more way, here we go. I have the equity goes up. It has two places. Let's put it this way. It'll be even cooler. Let's put it as common stock plus retained earning. Is that right? I will do the same things here. So what is this change? This change is by how much the common stock went up and by how much the equity went up. The retained earning went up. If we add those two together, okay, this is really, we can see all those numbers right in the statement of cash flow. Okay, I'm trying to show you all the numbers at the same time. Maybe I will just do that. That will be better. Okay, here we go. That will be better. Okay, good. So we can see, okay, what really happened? What really happened here that change in assets, I'm seeing it's in the change, it's supposed to be the cash. So how much is the common stock went up? The common stock went up by 15. I have here 15. And how much the retained earning went up? We know it's 52. Does that make sense?
Yeah.
Okay, so total really, that contributions that come to the cash flow, they are really those two, 52 plus 15 to the company. So that's from the company point of view. And how do we see it? Here is the 112 minus the 60. That's really give me exactly the 52. So this difference of 52, it's nothing but this 112 minus the 60. Fair enough? So this is the beauty. We see the connections between all those statements. Statement of earning, after all, come to explain the income statement, ending up bottom line, addition to the total assets of the company of 112, unless the company have distributed part of it as dividend. And only the difference, that's difference of 52, increasing the assets versus the liability. If the liability didn't change, this one will have increased the total assets. Okay, the change in assets. So, okay, good. That's from the company point of view. So if I were to ask you, how much was the contribution of the shareholders to the company this year? How much to the company? That was 52 plus 15. Because 15, they gave more money to the company by the way of buying more shares. And 52, it's by not taking all the profit out. They kept 52 in the company. Okay? This is a really good way of understanding what happened in this company. Good. Let's look at that now one more time from the shareholders' point of view. I'm a shareholder. What did I got? Okay, I kept out of the 112, I kept 52 in the company. Therefore, the company have distributed to me 60. On the other hand, I bought more shares. So I returned part of the 60 back to the company by buying shares. This is the 15. So if I look at those two numbers, give me exactly my 45. This is the 45. So if I look, the dividend I received minus whatever I bought more shares, I got already 45. Now I'm looking from the point of view of the shareholders. That's whatever I look at the statement, it's from the company point of view. From the company point of view, they distributed 60, that's why it's negative. It's reduced their cash. When they issue shares, they received 15. So how much the company have paid cash? 45. That's what give me minus 45 for the company. So from the company point of view, they look at it as they distributed 45 to the shareholders. Does that make sense to everybody?
Yes.
Yes.
Why is that guy? I love that yes on the screen. That's what I encourage. You did it really nicely. Good. So now we understand very well the meaning of those two rows. Very important two rows. Extremely important. Those two rows showing me how much cash the shareholders have received. The bigger the minus of the sum of those two, the more cash shareholders have received. Okay, so far so good. Now let's go and look at the line above it. The line above it shows me how much cash I have raised or paid to the debt holders. One more time, look at that one. you know, the assets of the end of the year or the beginning of the year, it's really come from liabilities and equity. Those two, this plus this gives me this. So this is what we talked about, the difference. The difference tells me potentially in our case, we really contributed 67, okay? So that's contributed 67. Let's see what happened to the liabilities. The liabilities, we distinguish between short-term and long-term. The short-term, we do not include for this analysis in this part. One more time. The part of financing activities, we only deal with increase or decrease in long-term debt. The short-term debt, we deal with it in the working capital, which we'll discuss in a second. Here we deal with only the long-term debt. What happened to the long-term debt? We used to have 600 and we have less. How did it become to be less? We simply redeemed part of the debt. That means the company have distributed 35, okay? That's why the long-term debt went down. So here we go. So I have minus 35. So now that makes sense, okay? I have minus 35, that's the cash flow of the debt holders. So if I look at this different, I distributed 35 to the debt holders. So that one went down by 35. That one went up by 65. So let's write it down here. The change, it's really minus 35. Fair enough? So now I don't need to be a magician to realize, by the way, I ignored the liabilities, yes? Let's put the liability as a negative of the total assets, okay? This is only, it's not really total liability. I really should have split it. I'll tell you why I will do it. Let's do it this way. Minus short-term liability. And right here, that's right number one here. Minus short-term liability, 0. Fair enough? And now, I will write it this way. Okay? This is not really the total, that's the change in the difference, that difference. Because usually, even the assets, we'll break the assets in a second. Okay, we'll break that one also in a second. But now at least we understand it better, really. You know, let's ignore the short-term liability. It's a really small number anyway, but just for the discussion, ignore that. Like, let's look at that as assets, okay? Ignore the short-term liability. So if I really want to understand the change in the assets, it's really how much I have a change in the liabilities, long-term liabilities, and in the equity. The equity, I have extra 67. Liability, I reduce it, okay? So bottom line, my assets went up by 67 minus 635, okay? So it's going to be about 32. So I expect that the total difference in the assets, it's really 32. That's a really good analysis, a very simple one to understand. Let's look at that in the statement of cash flow. And there is, everything is really here. It's just the reason why we put any number in a certain place. The reason we put 112 here is because we want to emphasize how much the operation generated cash. So let me put it back. 112 minus the 112, okay? One more time, this is really changing every time. I don't know why. I need to find, I think I have a bug that I have to fix. It's changing for some reason. Let me clean, find the whole thing. No, I don't want to do that. I want to refresh. I'll figure it out. I haven't seen that bug yet. Looks to me something that I didn't really. Okay, that would be fine. Yeah. Okay, one more time. Sorry about it. Okay. We have 112. It's sitting here. Minus the 60. It's exactly the change in retained earning. So the 112, it's the source of cash. And the 112, I split it to two, okay? 60 distributed to the shareholders, and the difference I kept to increase the cash in the company. Second, that's really exactly this 52. Second, I raised more money from the shareholders. I have the 65. So 15, sorry. 15 plus 52 give me the 67 contribution of the shareholders. On the other hand, I reduce the liabilities from 600 to 565. That means my liability went down by 35. So my total assets, ignoring the short-term liabilities, it's really went up only by 32. That's the bottom line. That's pretty cool. Okay, now anybody wants to tell me, how should I call these minus 95? Anybody has a name? How much we have here? I have, yeah, anybody has a name, a good name for it? What do you say?
For the minus 95?
Yeah, how would you call this 95? What is really this 95? After all, what it is? Let's do it one more time. This is the 35.
What?
This is the 35. You go with me? Is the 35. What is the minus 45? What is the minus 45?
The left.
Reduction of long-term liability.
Exactly. 35 is the long-term liability. This is the cash flow to whom this money goes to the debt holders. Is that right? Say I used to owe them 600. I owe them only 565. So that means I gave them money, isn't it? The company has gave them money. How much money did they give them? 35.
35. Yeah.
Okay? So if I want to summarize the last part, on one hand, I gave a cash, I gave a cash to the shareholders, 45. Cash to long-term liability, how much is that will be? 35, is that right? That's supposed to be 80 now together. How should I call that number? Think about it. When I look at the company, let me make it bigger. When I look at the company, you know, the owners are the equity owners. They put money in the company, and I take a loan from other people. That's the way I get the assets. What happened during the year? From here, I jump to here. For the liability people, okay, I give them 35. How much money I gave to the equity owners? For the equity owners, I gave 45. Everybody agree? One more time.
Yep.
Yeah.
One more time. See, I had a profit. Maybe I will take those two numbers down here. Don't worry, it's confusing the brain, but it's really easy when we get it. Okay? Let's do it here. I'll put those numbers here. I'll put 112 minus 67, the amount that I kept in the company. That was, how much was that? 52.
45.
How much does that give me?
45.
That's give me
45.
60. Remember? Remember? This is the profit the company have made. I didn't distribute the whole amount. I only distributed 60. Out of the 60, this is this 60. Is that right? This is the dividend.
Minus 15. Minus 15.
Minus 15, I took it back by issuing them equity. So how much really the equity owners have received? 45.
Excuse me, Professor.
Yeah.
It's 112 minus 67 is not equal to 60.
You're right. So what, I think this should be 52.
40.
Yeah,
You're absolutely right.
right.
The
52,
increase
right.
between 128 to 100. Thank you for
Yes.
correcting me. You're absolutely right. 67 was the amount that, in fact, you add to the 15, that's the contributions to the company. My error. Thank you. So 112 minus 52, since the company have kept that money in the company, they didn't distribute the profit. Is that right? So this is what they got. On the other hand, the company have asked them, hey, give me back 15. I issue you more equity. So how much they ended up in their hand? They ended up in the sum of those two. I would love someone, and I will give 5-point bonus if somebody will ask a beautiful question in this point. I claim something is missing, that I'm inconsistent. Amos is not consistent. Amos is not putting one more very important number that I'm missing. In the truth of the matter, that's my criticism on this statement. Somebody should have made a correction here. And if somebody asks that question, you don't have to know the answer. Just raise it up, even if you're close enough.
There is the 90 that you mentioned. I think there's a difference of 10 in the cash. I don't know where is it gone.
Something more fundamental even. I will help you out, guys. It's still the bonus 5 point, okay? What do we see here? This is the cash that the company have given back to the long-term liabilities. What is the 45? It is the cash that the company have given to the common stock, to the equity owner. I claim that in my 2 sentences that I just said now, I wasn't correct. I made a mistake. I didn't make a mistake, but it's like it is a mistake. Based on the statement, it's correct, but I made a mistake. I will repeat the 2 sentences. At least pick up which sentence is incorrect. I claim, which one of those 2 claims is incorrect? I claim, okay, statement number 1. The 45, it is the amount of cash the company have paid the equity owner. The 35 is the amount of cash, that's statement number 2. Statement number 2 is 35 is the cash the company have paid the equity, the long-term debt holders. Which one of those 2 incorrect? Is the 45 is incorrect or the 35 is incorrect?
I think the second is mistaken.
The 35.
Yes.
Okay, you already got 2 points. Now complete the 5 point. Why this is incorrect? You're absolutely right. The 45 is correct.
Okay, the 35 is I don't remember the word.
Let's go slowly. I will help you. I'll help you.
It doesn't reflect the interest.
Did they got more or less than 35?
More.
How much more? Now I'm helping you out. What is missing? Which line do you want to add here?
The interest we paid them.
Beautiful. You know what? I'll give you 6 points. Okay? I love that. That's beautiful. The interest. And how much is the interest? Do I see it in the statement of cash flow? Do you see it anywhere here? I don't see it.
It should be in the P&L, I think.
Exactly. Let's go to the income statement. You see the income statement, how much does it say? Minus 130. You agree? So I'm taking it from the income statement. So it isn't the income statement, it says the interest was 130. So how much money the debt holders have received? 130 plus 35. So let's do it two separate. Let's put it here. I'll write it 165. Is that right? This is for the debt holders. That's the correct number. And this one, it is for the equity owners. Those two numbers now are correct. Okay? Those two numbers are correct now. This is the cash flow for the equity owners. This is the cash flow for the debt holders. They're getting two payments. One payment is the interest. You know, they gave me 600. I pay them interest. That's, here it is. Where does it appear in the statements? It appears in the income statement. Here it is. Okay? And in addition to the equity owners, it's a little more complicated. I took back from them, because that went up. I took back from them 15, okay? And I gave them the difference between the 112 and the increase from 128 to 180. That will be 60 minus 15. They got for me only 45. How much cash flow have the company given to both of them together? So that's what we call cash flow of the firm. Cash flow of the firm. That means the cash flow the company have given. So I will add 165 plus 1 plus 45. That will give me 210. Is that clear, guys? It's a review plus really digesting what we have done last time, emphasizing things that seems known, but from my experience, I know it's not trivial, especially first time when you see it, it's really confusing. Okay? So why is it so important? Why 210 is such an important number? It's a very important number. Why is it a very important number? Anybody? Now think about it. What is the 210? The 210 eventually, yeah, the 210, it's really how much those two guys, the people that give liabilities and the people that give equity, how much money they have received from the company. Now, if I wanted to make a chart, I look at the company as a black box, a box. Who give money to that box? Whoever give a loan, whoever buy equity. Okay, I gave that money to the company. Those guys expecting to get cash every year. In 2002, according to the statements that we have in front of us, those two guys have received 210 cash in 2002. That's pretty interesting. So let's look at it as one more way, one more time. In 2001, we established the company. That's the balance sheets as of 2001. You know, the shareholders has 50 plus the profit they have last year. They kept that money in the company. They invested 178 in this company. The debt holders, we look only at the long term. They have given 600. Together, they gave 778. Let me write it down. I'll do a new one. Together, they gave 600 plus 178. That's really their investment as of the end of the first year. 600 120, 178. I combined those two. Remember the 128, that was the profit first year, okay? And they didn't take it out. So they kept it in the company. So their investment in the company is 178. That's what they really, those two guys together, they have invested 778. How much they got back from the company immediately the following year? They got 210. Wow, this is a really nice investment, isn't it? You invested 778. You already got back almost a quarter of it, more than a quarter. Is that right? Does that make sense, guys?
Yeah, it's
Yes.
more than quarter.
That's really interesting when you really analyze in the statements, when you really understand. On one hand, they have given the company 600, and the 600 plus 178, that's the equity owners, that's the debt owners. Together, they get that amount of money. Together, they received 210. That's pretty cool. You know, then I can say, well, I can follow the next year. How much they got to cash in the next year? And how much cash they got the following year? And if I look at that, on one hand, they established a company, they put 778 together by the end of the first year, and then they start getting cash every year. And then I can analyze, is this is a good business? So you can go back, let's say I give you a company, and I say, let's say you invested your money in a company based on the book value, you have investment in the equity plus the long-term debt in 2015. Follow up, look at the financial statements of them. How much cash actually have been given every year in the following 5 years? You will find out really how much cash they received. You might be very surprised. Some company will see a lot of cash being given. Some companies you will see not only you didn't get, they even raising more money as they go along. So that's really stage number one, understanding the cash flow from the shareholders and debt holders' point of view. That's why this part is extremely important. So if I wanted to fix it, you know, to get the numbers here in the right way, how would you suggest to fix it? It's not, by the way, the real life is you don't really fix it, okay? This is the way it is. But some, you know, to be a little creative, let's be creative. What do we want to see here? What we're missing is the interest. I would like to see the interest here. See, the minus 35, it's giving them money to reduce their debt. But I gave them also 130. I would like to take out from here the 130 and present it here. But if I do that, everything will be collapsing. So what it will be really an interesting way to do it. See, if I remove the 130 from here, okay, the 112 will be higher by 130. Everybody agree?
Yeah.
So what will happen if I will take this 112, add the 130 to it, add the 180, 30 for it, and do minus here. I will do plus here and minus here. It will not change the bottom line. Everybody agree? I think I have a bug that I have to find out why. I'm doing something and is collapsing the number.
It's changing your returned earnings.
Yeah, I does. I need to.
It changed from 180 to 112.
Yeah. Hold a second. When did it do that? When I clicked here? Let me see. Did it do it now? No. Okay, I'll figure it out. But you're right. It has to do with something here. Anyway, I'll figure it out. It's really complex because I don't really use the server. I do it on the client side, but I probably missed some one of the functions, but I will figure it out. Okay, let's get back to our stuff again. We have 112 here, and we have 35 here. So we want to make slight adjustment to this typical statement of cash flow. I'm going to add 130 here, and I'm going to subtract it from here. So from the statement point of view, it's like I didn't do anything. It will still be 10 in the end. And the 10, it's exactly the difference between 8 to 18. So nothing really got destroyed. But I made it clearer. By putting the 130 here, subtracted here, I'm putting back the minus 30, 130 to the minus 35. So I'm back to really present in the right way this part. I'm presenting what the cash flow for the debt holders, the 165. If I put the minus 130 here, it will be 165. This is really the cash I gave to the debt holders. This one will say this is the income before giving the cash to the shareholder, the debt holders. So that's fine, okay? This is really my profit from operation on a cash basis before I'm giving it to somebody, okay? So you can think about when I'm adding the 130 back, so it becomes to be 242, this is really the cash I created. This is really my net income on a cash basis, you can think about it, okay? So this one, after I have this cash, this is what we're adding the depreciation. This is really becomes to be the true cash I created when I add back the 130. And the cash, what do I do with the cash? Let's leave for now the investment, but what do I do with it? I will give 165, I'm giving really to the debt holders. And how much I'm giving to the equity owners? I'm giving them back 45. I'm giving really 45 to the equity owners. This is exactly minus 60 and 15. And by adding the minus 130, I'm really getting the 165 I'm giving to the debt holders. That's the beauty. A very small change here. It's a very significant meaning. Now we know why I spent so much time on this section of the statement of cash flow. It's an extremely important section. It really tells me the cash flow the company is giving to the debt holders and the equity holders. By the way, when I teach corporate valuation, I give that section again, exactly what I did with you guys, because this is the way you do a valuation of a company. How do I do a valuation? If I know the cash flow of what a company is generating every year, let's say I know all forever, up to infinity, just to exaggerate. I do a net present value of that one. That's the value of the company. Very simple become to be. But that's what we leave for another course. For now, we want to understand how important is this financing activities. Extremely important. We will add the 130 here. We subtract the 130 from here. This 130 plus 35, it is the cash flow for the debt holders. 15 and 60, it is really the cash flow for the equity owners. That's extremely important, okay? Please go over that at least 3 times, okay? At least 3 times, because you are a normal people. And normal people need to go over that at least 3 times to absorb it. It's not that easy. It looks easy, but it really isn't, okay? The brain usually refuses to understand it for some reason, okay? Questions so far? I think we need a break. More correctly, you need a break. Is that right?
Yes. Yeah, that'd be nice.
Yeah. I should ask that question all the session. You know why? Then I get the most response, isn't it? That's the one that I heard most of the people. What do you think? Or should I push another 5 minutes? Will you give me 5 minutes and then I'll give you extra 5 minutes? How about that? Instead of 15, we'll do 20. Okay? Agree?
Yeah, okay.
Yes.
I agree. We can go for another 5 minutes.
Beautiful. Let's do it this way. I just
We
want
can
to
handle it.
complete this. You know, I did a review, not exactly what we did last time. I count on you to go over that one again, over all those ones. Do it again. By the way, I spy on you. I don't really spy, really. Okay, but I get a collections of how many students have got into this session and played with this component. Okay, I'm doing a research to improve my teaching capability, not just mine, of everyone that teaches any course in Academy City. So we follow the behavior of the students, and based on their behavior, we improve the components. So anyway, let me take the 5 minutes to summarize this statement, and then we move to the next topic. A, statement of cash flow. If anyone wants to take a note, you can take a note now. I will even speak a little slower. Statement of cash flow is technically a difference between the balance sheet in the beginning of the year and the balance sheet in the end of the year. That's statement number one. Statement of cash flow also has 3 sections. The cash generated from operation, and then how the company is using that money it's generating. Part of the money can go to invest in the company. That's the cash from investing. So if I have a negative number here, okay, if I have a negative number here of minus 75, that means the company invested 75 out of the profit. They invested that into the company. That will increase the total assets of the company. Then whatever left, they can distribute to the stakeholders. Stakeholders, we have 2. We have debt holders and equity holders, okay? So the cash flow from operation can be used to increase the assets that makes growth to the company, and the rest could be distributed to the stakeholders, which are the debt holders and the equity holders. Since the cash flow from operation already deducted the 130, the statement as it stands a little misleading. Therefore, we suggest to add the interest back to the net income by, as if we take it out, okay? We take it out and add it here. So here, now it happened. Now I discovered the bug. The bug is, I know how to fix it. It shouldn't be, you know, it changes right now, but I spotted it. So we will add 130 here, and that will be the cash available. And then we add the same 130, we'll put it here because this is really what goes to the debt holders. One more time, we take the net income, we add back the interest, then we know really the cash, the generated from operation, and then we know that available to increase the total assets and the cash given to the debt holders and the equity holders. I think this is summarizing everything. So if anyone has a question, please approach me. I'll be more than happy to go over it one more time. We have plenty of time. I always finish everything on time.